Bitcoin has dropped again, and this time, the shockwaves are shaking the entire crypto market. With Bitcoin recently sliding below $86,000, more than 30% down from its October peak, many investors are quietly asking the same question. Is the bear market back? And is it about to get worse? Stay with me, because what's happening right now is deeper than a price correction. It's a shift in sentiment, liquidity, and global risk appetite that could impact your portfolio far beyond Bitcoin itself. For months, Bitcoin hovered near record highs, fueled by institutional inflows, ETF momentum, and excitement about a maturing crypto landscape. But once the air gets too hot, even the strongest asset needs to cool. And that cooling is exactly what we're seeing now. The decline below 86,000 isn't just a number on a chart. It's a psychological event. For many short-term investors who entered late in the rally, that level was the line between confidence and fear. Once Bitcoin broke it, selling pressure accelerated, stop-loss orders triggered, and the domino effect spread across the entire crypto market. But here's the part most people aren't talking about. This drop wasn't caused by one sudden event. It's been building quietly over several weeks. Liquidity in the crypto market has been thinning as traders lock in profits from the insane October run-up. Leveraged positions have been unwinding. ETF inflows, which once spiked daily, have started to flatten. And when institutional excitement cools, retail confidence cools even faster. Another major factor is macro risk. The global markets have been turning cautious as interest rate uncertainty returns to the spotlight. When rates stay higher for longer, risk assets, especially crypto, feel the pain. Investors rotate towards safer bets, and the most speculative assets get hit first. Add in geopolitical tension and mixed economic data, and you have the perfect environment for a broad market cooldown. But let's dig deeper. Does a 30% drop signal the start of a brutal, multi-year bear market? Or is this just the kind of correction Bitcoin needs before the next leg up? Historically, Bitcoin corrections between 20 and 30% are extremely common even within strong bull cycles. In fact, many of the biggest rallies only happened after painful pullbacks that wiped out weak hands and put the asset back on solid ground. So yes, a 30% decline feels dramatic. But in Bitcoin terms, it's not abnormal. Still, something feels different this time. Part of that comes from the sheer number of new investors who entered the market during Bitcoin's run toward 90, then 95,000, hoping to ride a straight line to six figures. When newer investors panic, they panic fast. And panic selling doesn't just push prices down, it deepens the emotional reaction across the market. Ethereum, Solana, and most altcoins are now following Bitcoin's lead, some dropping even harder. That's what cooling looks like. Slow at first, then suddenly everywhere. But here's what you need to understand. A cooling market isn't necessarily a dying one. In fact, it's often a sign of stabilization after an overheated cycle. When prices rise too quickly, liquidity becomes unbalanced. Traders become overly greedy. Momentum replaces fundamentals. And once that momentum fades, corrections happen to reset the system. Right now, long-term holders, the investors who truly drive Bitcoin stability, are not selling in panic. Their on-chain behavior shows discipline, not fear. Miners, another important part of the ecosystem, have slowed their selling as well. These are signs that the foundation of the market remains intact, even if the surface looks shaky. The real question isn't whether Bitcoin dropped. It's what triggered the deeper shift in sentiment. And the answer is straightforward: expectations. For months, the narrative was that Bitcoin was on a straight path to $100,000. And when the market believes something is inevitable, it becomes fragile. One unexpected dip, one slowdown in ETF inflows, one negative macro headline, and suddenly the narrative breaks. That's what we're seeing now. A narrative reset. So what happens next? In the near term, more volatility. Crypto never cools off gently. Prices may bounce, then fall again, forming a choppy sideways pattern that tests investor patience. This phase often separates long-term believers from short-term opportunists. But medium-term, Bitcoin still has strong tailwinds. Institutional interest hasn't vanished. It's simply taking a breath. ETF capital didn't reverse, it just stabilized. And as long as demand remains stronger than supply at key levels, Bitcoin still has a path back toward new highs once the market rebuilds confidence. If you're an investor, this is where discipline matters most. Chasing pumps creates regret. Panicking during dips creates even bigger regret. Smart investors watch, analyze, and act based on strategy, not emotion. And this moment in the market is a test of exactly that. Before I wrap up, here's the final thought. Cooling is not crashing. A healthy market cycles through expansion and contraction. Bitcoin's latest drop below 86,000 might feel alarming, but in context, it's a natural recalibration after an overheated rally. The key is understanding what this moment represents, not the fear, not the headlines, but the opportunity to reassess the market with clear eyes. That if you found this breakdown helpful, make sure to subscribe for more analysis on crypto trends, market updates, and financial insights tailored for everyday investors. And if you want deeper weekly breakdowns, drop a comment below. It really helps the channel grow. Thanks for watching, and I'll see you in the next video.